following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 6th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend as well. It is great to be back with you. But, you know, just in case you're not having a good day, let's make sure that we do that. Of course, the easiest way to do it is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, just as we do every day, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. By email, steve@tfnn.com. And, of course, inside the Tiger's Den, love to get those instant messages, pings, whatever it is, what we call them. So let's go ahead and get our show started on terrific Tuesday. I don't know, we can call it really Turnaround Tuesday. But we're going to call it Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is trading up 21 points. She's traded 18,512. S&P is trading up 3 points at 2183. NASDAQ Composite up 19 points. She's trading at 5268. Russell 2000 is completely flat. Gold's up 24 bucks, trading at 13.50. Silver trading up 65 cents at $20.15. Perhaps mostly spurred on by the large pullback we've got going on inside of the U.S. dollar index. Light sweet crude is flat right now. It's off 6 pennies, so no big movements there. Dollar-wise, the upside, 52%. CEPHEID, CEPHEID. How would you actually pronounce that? I wonder if this is a buyout or what do we got going on here? Probably something along those lines. In any event, it's got an $18 premium on it. Amazon, no buyout there. It's up about less than 2%, $14. You've got Google's up 11 bucks. Priceline is up 11. So, you know, you've got some of your big Apple's up 10 cents. No big deal there. But certainly a number of the top 10 holdings inside the NDX 100 that are to the upside. To the downside out here, Cummins Inc. CMI is a ticker symbol. That's off 8 bucks, about 6%, a little over 6%. AutoZone down less than 1%. That's $7 to the downside. Nothing else really substantially percentage-wise. It looks like, well, it's the junior miners that are the largest percentage decline. So what's the market doing? Is it doing anything different than it did on Friday and then Thursday and then Wednesday and Tuesday and so on and so forth? And the answer is no, it didn't. Hey, here's something, though, that we want to focus on, be concerned about. So we saw the market rally early in the morning, give back those gains, move to a negative, then gone ahead, moved, positive again. And where are we at right now? Now, during all that churning and burning out here, since about 10:30 this morning, no, this couldn't be 10:30 this morning. This should have to be, when is this? Because this half-hour sessions, there's no way. Let me see if I can actually get this to tell me when. September 5th. Okay, so since yesterday. Today's September 6th. So if we take a look at the equity futures, that's what we're looking at. This is the NQ, by the way. If there's anything to be aware of, it is two patterns that are present at the moment. The candle session we're in does not complete until 1:30. So you got 20 minutes and anything can happen. And what I mean by that is if we go from the low of yesterday at 10:30 in the morning up to the high that came in just before we went on the air at 1 o'clock, you got up to a seventh wave. In this case here, it's showing this letter G on my system, and it was doing so with less relative energy. Now, what does that say? Well, number one, it's telling us that on any of the bounces that we've seen thus far, there's just not any energy. There's been no enthusiasm or energy, quite frankly, in the markets here for a while. Today is no different. However, the difference here is when you get to that seventh wave session, when you do get to price moving higher with less relative energy, all we do is we wait to see, hey, are there any bears out there? And we'll know because they will generate some type of reversal signal. Doesn't have to be during this half hour. It can be during the next, depending on the type of candle session that occurs during this half hour. Could be one that could never occur out there. Just keep on motoring higher. But inside the 30-minute charts, it's only the NQ where I see this pattern. And this is the one that I would say that we want to focus on because, if this pattern here fails, price continues to move higher, maybe pulls back a little bit and then moves higher into the late afternoon or early evening out there, that's going to be giving you an important message. So that's the first thing that Stevie would focus on. What would be the second thing? Advanced decline issues out here are going to be helpful. The NASDAQ composite, its price oscillator, or its advanced decline oscillator is what I should say, managed to close above zero on Friday. It says that the bulls, buyers, are the ones that are in control. We'll see if they have any follow through today by day's end. Then advancing issues inside the New York Stock Exchange right now about 236. I think it needs about 312 if I am correct. Which it has had intraday, but right now it does not. But if you get 312 net advancing issues inside the New York Stock Exchange, after spending a month or more down below that advanced decline oscillator line, it will now be above zero. That will give you a message of bullishness. And if it does that, the NASDAQ composite also likely to, at a second day, be above zero. And the Dow doesn't need that many issues to get above zero either. So that's something that we're going to be focused on. That happens to be this chart here, or series of charts that we're taking a look at. New York Stock Exchange is the one that's on the left. So just slightly below zero. New York Stock Exchange, the NASDAQ composite just next to that. Now, in the case of the NASDAQ composite, there is, and I do underscore, there is, did I say I would underscore it? Absolutely, positively nothing bearish about the NASDAQ composite. Not a gosh darn thing. You're up over the 2000 highs. You're up over the 2015 highs out here. You're trading back into a previous swing point from just a couple of weeks ago out here, but that's not a big deal. New York Stock Exchange, that thing is above the 0.786 retracement level. It's been above it for several weeks now, 10.759. If you are a big believer in Fibonacci numbers, which you should be, you know that once you get above a level, which is the 0.786, there's absolutely no reason to not go on to the next level. Take it to the next level, right? Who sings that song out there? So that says 11,254 is absolutely in the cards. So you've got two of the indices. Forget the, I almost said that, didn't I? Forget the advanced decline oscillator just for the moment. The Dow, by the way, is above the zero area here. The case of the Dow, it's above its 2015 highs. In fact, last week when the market had kind of pushed down, was on Thursday, I believe it was, Wednesday and Thursday. All that it was doing was testing a breakout area from 2015. It's above those levels. So we ought to see the Dow make a run toward the 18,622-ish type area. VIX index, lower right-hand corner, down below the 50-day exponential moving average. Everything here is set up for the markets to move higher. And you've heard it here. They may move higher. In fact, now I'm almost 99.9% certain of it. I heard a new Jim Cramer commercial out there actually suggesting that he wouldn't be upset or something like that. I wouldn't blame people if they started selling now because of, how bad September normally is. If ever there was a signal that the market's moving higher, I think that was it. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on.
Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's get right to a couple of special requests that came in. Just checking to see if any more during the break. Yeah, got one there. Okay. So let's go ahead and get to those. This is for Rose. Rose had requested that we take a look at ticker symbol CBI. So let's go take a look at it. That is Chicago Bridge and Iron. I'd say they've been around for a long time out here. Now, I believe, I believe that she's looking for a buy out here. So you can see we've got Chicago Bridge up on my screen right now. A couple of days ago, that would be on Friday, it formed a brand new TAS market profile out here, a daily TAS market profile. So if this has some support, we're trading right into it right now, Rose. That support level being 29.54. Are there any other patterns out here that are showing up that may give us a bottoming signal? Does anybody see anything out here? And the answer is, yeah, actually, there may be. There may be. So let's go take a look at this first. First, let's put this on a little bit longer term basis just to kind of get a feel as to what Chicago Bridge is actually doing out here. Now, you know, certainly not one of the better performing equities as we take a look at where it is trading in relationship to, you know, the 2009 level, which was down around $9, and you're at $29 right now. But don't forget, this thing was at the $90 level just a couple of years ago up at the top. Let me get rid of those profiles because that it's just downright ugly. Let's take a look at those on a monthly chart out here. So here's what we know right now. The last two areas where there was some support, this is a longer term, and I don't know the time frame that Rose is taking a look at, but we're just looking back to some areas where some bulls actually showed up inside this equity, where they believed that there was value, which was between 23.88 and 32.16 being the number out here. Now, the last time that what price was trading into this area where it's trading right now, which is trading down at 29.65 monthly wise, we're going back to October of 2011. Now, in October of 2011, there were 30 million shares down there. When we finished the August level, you were at about 27.8. So at a minimum, it's moving lower, you know, with less volume than all the way back in 2011. The swing point that it broke for the large A to B equals CD to the downside, that basically would put these guys out of business, takes you back to January 2015, where there were 57 million shares. Again, last month, 27. So moving lower with light volume out here. Now, there's no bullish reversal signal or anything along those lines. We're not testing a swing point low, so there's really nothing out there, Rose, that's going to give you a great indication that you've seen some type of a bottom out here. If we take a look at what went on in the weekly basis, I'll go back to the week that began January 26th. There were 24 million shares there, and we are below that with 5.7 from 2 weeks ago and 6.9 last week. So, and even the most recent test had 10 million shares back on February. So moving lower with less relative energy, big time out here. It doesn't mean that it won't get down to the 2388 level. And in fact, that's the first place that you may want to look for a possible signal of a bottom out here. We haven't seen any kinds of signs of strength in this equity, just really signs of weakness out here. So with regard to a buy out here, I will tell you that a few trading sessions ago, that was on September 1st, it gave you a Tom DeMark sequential count, a Tom DeMark TD combo count. Those oftentimes are areas, I'm not showing that on the screen out here, but they gave you getting both those signals is the potential of a move that is exhausted, let's say, and that there could be a bottom that is nearing. How will we know, Rose, if there is? You'll see a price close above this figure right here, $30.19. Of course, that's today's figure. Tomorrow might change just a tad in the next day. But if you put $30.19 on your pad of paper out here, that could be a buy or a signal that there's a change in trend, which is only going to give you a move up into the $39 area. Or otherwise, you're looking for that 2388-ish area. That is ticker symbol CBI, Chicago Bridge and Iron. Yeah, we spent a little time there, but, you know, the way that I'm sure that Rose analyzes charts, no different than you or I, and so it's always worthwhile for us to go through these things, you know, in detail, and that way, you know, you can make your decision. Now, the second ticker symbol that Rose wanted to look at is Team Health Holdings. TMH is the ticker symbol. So I'm not familiar with these guys. Not that I need to be familiar with these guys, but one of the things that you and I can see out here, if we blow this screen up on a daily basis, you can see that just a few short trading sessions ago, August 26th, that this equity here, Rose, formed a nice little hammer candle. And I say little because it wasn't a huge hammer, but it was a hammer nonetheless. The low of 33.22 was the number. Now, so far, that low has held. It's been tested. It's been rejected. It was tested on day 3 out here, right at the low. It got down to 33.13. Remember, it was testing 33.22. The volume there was 958,000 shares. It was tested with 462. So a test on light volume with regard to Team Health Holdings out here. Let me put up the market profile, see if there's anything here where we can glean some information, maybe some support. You're back inside the daily profile. So what does it say to us about TMH? Formed a hammer, formed a nice little hammer candle. Level was tested with lighter volume, held the support. Where is price in TMH going to head to? I say that the charts are telling us that this is going to head to 35.24 sooner than later because it's you know, it's tested a swing point low. It was a hammer candle. That tells us that the market is trying to hammer out a low out there. In fact, that was a to B equals CD pattern as well. We can take a look at that. That was the A point out here in the trading day of June the 7th. Your B point down here on July the 5th. And really just kind of a shallow retracement out here. But we can see the one-to-one, uno to uno, the exact number being $33.45. That happened to be where that hammer candle formed. So you've got the, if you want to take this as a long position, you've got the message. What you don't want to see this do is close below $33 even Steven out here. Why? Well, if we put this chart up on our screen, we're going to see that price is now above its oscillator unchanged line. That's the red line out here. That at least gives us a nice signal that price price oscillator is turned up. That's a positive out here. You know, you'll see a little green dash line on my screen out here getting above this area, 34.90. I'll give you the exact number. It might be 34. It's 34.91. That would be short-term bullish because it will take out a resistance area out here. So you've got all the signs. Now, I don't know what your term period for holding was. was. So here's where your target. So you've got a confirmed A to B equals C to you. Buy the D point out here. And that says that we're going to go ahead and use our market profiles as the first indication as to where this ought to move to, which is the $36.19. So that is Team Health Holdings. You'll always target the prior swing point areas, which are in the $43 range. So that's TMH. I'll put this on a weekly basis just for, since we've only got about 30 seconds, not even. But let's go see what it was doing. So here's the big breakout area. Tom always talks about, right? He taught you, he taught me, he's taught the world about being able to buy a breakout. Wait for it to come back. Look for a sign of strength. And if you take a look at the weekly chart of Team Holdings, that was February 22nd. That was a huge sign of strength out there. Volume behind that move was about 13 million shares. And guess what? Price came back and tested it. Looks like a hammer candle on a weekly basis as well with 2.3 million shares. 2.3 million tests versus 13.1. Rhodes, you might be onto something. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Of course, as we come back, it is the 1:30 time period out here, and we can see, if we go back, take a look at that 30-minute chart out here, we can see we've got that seventh wave, and we do have the cavalry, the bearish cavalry that did arrive between the time period of 1 and 1:30. We've got a nice little bearish engulfing, bear sash style candle out here. So a bearish engulfing candle. You've got a, on this chart here, let me just see, it looks like a brand new 30-minute profile that formed, which is really more so, it's a wide box out here. It has a bullish connotation, but it's right up at resistance, which is at 48.2460 out here. So the level to be watching for inside the NQ as we speak at 1:30 is going to be 48.1571. Not to be exact to the penny, but I have to be exact to the penny. So 48.15, we'll call it 48.16. If you see a move below that, that says that price is going to run down to 47.99. Does it say the sky is falling and that's it? Are you kidding me? The markets of the last 8 weeks is the same market that we're in today out here. It's a short-term trading extraordinaire. It is, I don't know. What should I say? What should we call it? It's frustrating, I think, for many of the, for everybody other than TFNN listeners. It's not frustrating to you because you know that what we do is we figure out what the market is doing. What style market? Are we in a trending market? Which, look, the longer term, we are in a trending market. This is a market trending to the upside. Anybody that could possibly say anything other than that, I don't see it. Really, we're up at highs all over the place. So we got a market that's trending up. However, we're in a time period here where the market is doing nothing but trade sideways in a range out here. Range bound. No problem. It doesn't mean you change your holdings. It doesn't mean you add new holdings out here unless you look at individual stocks like Rhodes was doing out here. But with regard to the indices, it's a chop, chop, fizz, fizz, and it ain't no relief until you actually break the consolidation. Now, Bill sent in a request. He wanted to take a look at UNG because he's looking at an A to B equals CD to the upside. And, Bill, we'll go take a look at that, but I must look at what the current contract is doing to really get a feel for what UNG might be doing. So as we take a look at this is the October contract for natural gas out here. Here's and hey, a nice little trend to the upside, which is still intact out here. However, we're seeing a bit of a pullback today and likely a bit of a pullback to at least test that rising trend line area. That is the red diagonal level from lower left to upper right. We can see that price right now is below its TAS daily profile. That then brings into play out here $2.62, which is the weekly profile out here, or maybe just slightly above that area from a trend line standpoint. But even if it got to 262, that would not be that wouldn't break the trend. Would just be testing the level of support. You'd be coming back into a set of swing point areas out here, so you could be taking a look at volume on a pullback. So if you are looking at the A to B equals CD, which I don't know if you're long or you're short, you're looking to get in, I would not be buying it right here. If you're trying to buy it, I would be looking for a test of that 262 or that trend line area out here and be willing to close it if you saw a close out the position, I should say, if you see a close below 262. Now, the other thing that we can see out here with regard to and so maybe I don't know which ABCD you're referring to. It's possible that what Bill's looking at is just simply going from this August 12th level. Let's just go take a look at it from that low to the high out here back on August 26th. And what Bill might be looking at is say, hey, this is at the 0.618 retracement level, $2.72. And he is exactly right. It is there. But is that the time to go ahead and just fire away and take a long position? No, we'd have to really go down and take a look at a short-term chart, a 30-minute chart or so to see some other type of reversal signal out here. Here's what else we know. If I go ahead and turn off the market profiles now, if we turn off the retracement level, so let's turn off those boxes. Let's just get rid of the retracement level. I don't need to hog up unwanted space out here. And here's what else we know. We know that there are bears out here at these highs at the $3 level. They showed up on this trading session right here, July the 5th. We can see the bears showed up again here on August the 1st. You got another reversal. This is called the evening star right here, which was between August 3rd, 4th, and the 5th out here. Another reversal signal right here. So you've got some sledging. I don't even know that sledging is a word, but boy, you've got some real sledging. You've got some real resistance in the 290-ish type area out here. So we're also, when we take a look at natural gas, inside a relatively tight trading range out here. So make sure with regard to the A to B equals CD to the upside, that's possible, But boy, you've got to get through a lot of sellers that are just simply sitting there giving us those signals inside that 290-ish type area out there. So be careful. Now, with regard to the UNG, now that we know what the natural gas contract is doing out here, then we can start picking apart UNG. So what does that tell us for UNG? Well, let's take a look at its profiles. It's going to give us some different numbers to rely upon. However, today it is below its daily bottom of its box out here as well, Bill. So that tells you that price ought to hit 787. If it breaks below the swing point out here, which would be really breaking the trend line on the October contract, then you would be targeting the 711 area, and you can watch the swing point from August 11th and check out volume there. But you got to really, you got to. What horrible grammar is that? But it's a technical term. You gotta, right? We gotta, and you gotta. Those are two terms that must be put into the dictionary out there of technical terminology. So with regard to UNG, if you're in it, I don't see any reason to necessarily get out. Of course, it depends on what price it is that you're at. But I think I provided you what you should anticipate price is going to do, which at this stage here is continue to pull back to the levels of support that we looked at on the October contract. So, Bill, I hope that assists you with the way that you're taking a look at UNG. Now let's see if anything else here has come in. What else has come in? We've got. I think Bill is active. Bill might be back to work, because Bill has also requested that we take a look at that GDX. Steve, what area will GDX hit as a short-term resistance? Thanks, Bill Laruni. So let's go take a look at the GDX, and why not? GDX is moving up. Let's go see what kind of volume is inside here. You got gold up $27. It's above any kind of level of resistance. And the answer, Bill, is I would say that where price is headed to, let's take a look at a couple of different levels out here. Let's first remove the market profiles, because that was just a lot of clutter out here. And here's what we know about the GDX. First, the volume today, 43 million shares. Going against a downdraft of 168 million shares. That was on the trading session of August 24th. So what you and I know is volume is moving up on light price. Does that mean that you should fear the spear? The answer is no. It just means volume is moving up on light price. We also know that the GDX was in a very nice, since early 2016, late 2015, really, but we're just going to early 2016, a nice, and I do mean nice, a beautiful rising price channel. And price broke through that on August 24th with what? With volume. That's how you break a change in trend out here. So what could be going on right now is nothing more than a counter trend rally. That's going to at least take you back to the bottom of that rising price channel. Now, what's the exact price on that? I don't know. I could give you the range. It's about $29.50 or so as a level. Just depends on what day. Now, if price gets inside of the old rising price channel, it will have been a false break to the downside. This, Mr. Bill, could be setting up, and that's different than the Mr. Bill that's in the Tiger's Den, I believe. I'm sure that it is. This could be setting up the A to B equals CD to the downside. Light volume on the way up. Something to think about. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We didn't really finish off the GDX, so let's go do that for our man, Mr. Bill, out here. And let's go. So we know about the rising price channel. That becomes a nice target area. It's also the 0.618 retracement area in that 29.26, 29.50-ish type area. So that's going to be a level of potential resistance. Again, price gets back inside there. You're going to see a run for the hills, 31.79. That's the old, most recent high out here. Now, if we take a look at market profiles, let's go see what they provide for us. Let's go ahead and turn off the channel lines, and that way we don't clutter the chart. This says that you're right now trading into one resistance level, which is the bottom of the daily box out here. That is at 28.71. So if you're long the GDX, you are looking for a close above 28.71, especially since you're coming up on light volume. If you do, then you should anticipate a move up into the 29.54, 29.73 area, which could become a real significant resistance zone. So look, as your pilot, I'm suggesting now is the time that you want to fasten your seatbelts out here. So this could be turning into an A to B equals CD to the downside. And I say could be because we really won't know until we see what happens with price getting and testing the bottom of that old rising price channel out here. Let me on my other chart, but right now things are short-term bullish. There's just absolutely no question about it. So it's short-term bullish as we speak right now. There's no other read on that other than close maybe below today's open. That would change things. Today's open would be 27.92. I'd say 27.95 to be exact out here. And so therefore, you should expect a bumpy ride as price continues to move higher. And of course, that's all going to be dependent. Now, the move inside of gold out here, we know that it completed an A to B equals CD to the downside. We know that both gold and silver did. We looked at that last week out here. Here's that A to B equals CD pattern. So, and we know that when you take a look at these patterns out here, let's go take a look at what gold is actually doing. Let's get rid of market profiles out here. Let's turn those off. We know that when you get a buy the D point, that your price targets become retracement levels. And this actually was not just a buy the D point. It was a Gartley buy pattern out here that you then have 5 potential outcomes. Outcome number 1 was achieved on Monday, certainly achieved yesterday and today, which was the 0.382 retracement level of 1335. We gave you a figure of 1333 on Friday and said if gold gets above that level, that turns things into becoming short-term bullish for gold. Well, it's done that and then some. We have a wide-ranging bar coming in the 0.618 retracement level, level number 2, 1354. What does that say to you and I? That says you can anticipate price is going to go higher. Can I guarantee it? No, but the bulls can guarantee it, and that's who's in control of the market. You get into a retracement level with a wide-ranging bar. Markets don't end on wide-ranging bars. Now, if it tires out here, moves sideways for a couple of days, different story. Otherwise, the story is I'm headed back to the 0.786 retracement level, 1367. So what should you see going on inside the mining equities? The same thing. The counter trend rally or the rally should continue up to that next level. You get above 1367, you're going to be back at the highs of 1384. And folks, if in fact, for whatever reason, we don't need to know the reasons why, we just need to know the patterns that are out there. If we see price get above 1384, this is a huge A to B equals CD to the upside. One thing at a time. It's a Gartley buy on a daily pattern inside of gold. If we pull this back to the lows in December of 2015, this, my friends, is maybe there's another one. Let me see if this was the Gartley buyout here. Yeah, probably. But let's take a look. What I'm showing you is I'm showing you the high. How do we really want to do this? Yeah, that's going to be it. So we're looking at the high out here on March the 11th, the low on March 15th, the high on March 17th, and there's your 1-to-1 A to B equals CD. To the upside, there's your bullish engulfing. But price broke through that level, so it didn't really hold. It just got you back. So, like, this is validly, this is the second. This is only the second. I take that back. I guess you could call this one. This could be the third. I got to just call it like it is. There's your second A to B equals CD. It was a 1 to 2. There's your second Gartley buy pattern. That certainly turned into something, right, out here. And so you've got Gartley. Gartley's been hard at work inside of the gold market. So these things can always turn into A to B equals CD patterns to the upside out there. So with regard to the GDX, Bill, I hope that assists you as well there. So let me see if anyone else has sent in any requests. And feel free, if you're inside the Tigers Den, Ron Meyer, he wants to take a look at JDST out here. So, Ron, thanks for asking. OT stopped out of J Dust looking for re-entry. So the junior JDST, is that the short position out there? JDST, it must be because he was stopped out. He couldn't, or he could have been stopped out to the upside by taking his profits. That's so. This looks like this is the bearish position. So with regard to JDST, Ron, we just spend a lot of time on the GDX, which is really where you get your signals from on JDST and or the GDX. Thank you, Jay. Appreciate that. So having just looked at the GDX, there is no short position inside of the miners as we speak just yet. So you should anticipate the junior gold miners to head lower out here. That's the way that I see things right now. That doesn't mean that it's not going to find a bottom, that there's not maybe an A to B equals CD to the downside that is moving on. You've got to really watch to see what happens at these different retracement levels and the test of that rising price, the bottom of that rising price channel that it had broken through. Now, with regard to gold, I might as well just go take a peek on the current contract on a 30-minute chart out here and see what my eyes see. And really, things on a 30-minute basis, folks, they stay bullish unless you were to see a close below 1347.70. That's a 30-minute chart. That's the oscillator unchanged line out here. Otherwise, things just simply look like they will continue to move higher. Same holds true for silver as well, by the way. If we take a look at it, up nicely, up 80%. There's your wide-ranging bar, smack dab into the 0.618 retracement level. So we know what that means. We know that silver, hi-ho, silver is on its way to $20.65 out there. So that takes care of all of the requests out here. But you can go ahead and continue to keep sending me your cards and letters, and I will do my best to get to them in the next 10 minutes, even though we don't have a full 10 minutes of time. So that takes care of the metals, the miners, stock market. We already took a look at that, so we know what's going on there, at least short term. You already know my view from last week. Well, just about everybody and their brother, and now that includes Jim Cramer, must have heard my comments from 2 months ago that said the market was going to move higher into September 9th. And then last week, I officially said, not so fast. Not that it can't happen. And I'm sorry to upset the bears out there. But the reality is, and I do mean reality, this market is not going to be the September to remember to the downside. Chances are, and I'm not playing both sides of the fence here. I'm telling you, I've changed my, I'm telling you, I've found reasons, many reasons, not one, not two, not three. I have found many reasons to suggest that the markets are going to move higher. It's going to blow people's minds. Don't let it blow yours. Don't let it at least blow your brains. Make sure you're using stops no matter what side of the trade you happen to be on. See Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
welcome back, folks. And this is, I will apologize to subscribers out here because although I included a number of charts, you don't want to inundate people with charts. And then look, my newsletter service, if you take a look at the expanded edition, it covers every indice that is out, every major indice and sector within inside the S&P 500. That way it can assist you with trading because you know where the levels of support, resistance, where we're at in the stage of the rally out here. And on Friday, kind of flew under the radar out here. We did see a very large rate of change, that is, inside the VIX index, which is really the bottom panel of my screen out here. Now, longtime listeners to the Trader's Edge show know that I focus on one-day rates of change greater than 10%. However, there are days where you see a rate of change less than negative 10%. How do you really say it? Less than negative 10%? Because I can't say more than negative 10. More would be above a minus 10. But you know what I'm referring to, continuing down below minus 10 or lower than that. And that's what we got. Now, sometimes what that can actually turn into, it's one or the other, can be the termination of a move. I found that with regard to greater than 10%, you've got a bounce that is, if you don't anticipate a bounce in the futures market, you are leaving money on the table out there. Don't do that. You look for patterns, but within 24 to 48 hours, and it's typically the sooner than later scenario out here, you're going to see at least a decent bounce inside the marketplace. Well, if we take a look at this trading session, this is the S&P 500, by the way, that we are taking a look at. Give me one moment here. I want to do one more thing. Like, I've got 2 minutes, so I can do this. I can do this. This is really to be able to provide you with information, both both sides of the trade here. So on the S&P 500, by the way, the number that you want to be watching is 2188.07. Remember, I did say I was going to give you information. So 2188.07 absolutely, positively changes the character of the market. We're at 2183. That's why I'm giving you the number 2188.07. That can be resistance. So if you're a bear, be looking for the sharpshooters to be up at 2188.08-ish type level out here. Now, a couple of trading sessions ago, to get back to the ranch out here, a couple trading sessions ago, that's on the trading day of August 31st, you had the S&P 500 form a nice little hammer candle. It was only one of maybe a half a dozen indices that had formed hammer candles out there. Hammer candles typically mean the market is hammering out a bottom out here. And then we have on the trading session of Friday, you get that negative one-day rate of change out here. Got down to minus 11.13% out here. And we're seeing some follow through today. We saw rejection of that hammer low on the trading day of September 1st out here. So, maybe, just maybe, this narrow range is about to move. Now, the nice thing is, not only do we have a hammer out here, it couldn't get any better for you as a technical trader. Those of you that do believe that the market has one role, and that's to provide you and I with messages. So you've got a hammer low. That's the price point, 2157.09. If you break through that to the downside, it's curtains. Yeah, and then I'll tell you where those curtains will take us. Likewise, if you break above the highs from August 23rd, that's a shooting star. So that high is 2193.42. First level you're watching, 2188. Forget about the pennies out here. You close above 2188, you're going to see the S&P go try to take out 2193. But folks, when you get a negative one-day rate of change of less than 10%, if you want to go back to the most recent time that we saw that happened to be on June 28th. And that led to the great rally of June and July. So be careful out there. Those that are just simply focusing on the bearish approach out here, they don't pay attention to the minus greater than negative 10%. Hey, how about the time before that? That was March the 1st. Initiation move. We may have just seen another initiation move. Folks, stay tuned. Our man David White's going to be up next. Then you got the Tom O'Brien Show and Andy Heck to take it on home. Have a great Tuesday. We'll see you on Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.